What's going on, everybody? It's Blake here at Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading. All right, so this week it's going to be a quicker video. One, because I'm losing my voice, and two, because we are in a downtrend, and you guys know what we do when we enter no trends and downtrends. Our number one priority is always preservation of capital, and if you have them, year-to-date gains. It's been a very interesting year of trading. We've had two uptrends. This was our first uptrend back here. You had 3 days to get paid. We talked about that one. And then this was our most recent uptrend, and this one actually did pay. We had, roughly 12 days of uptrend where you could have gotten paid. If you were getting in back here with me, then you could have scaled easily many times if that's the strategy that you were executing. So now we are in a downtrend. But we're still, I would call this a contained downtrend. So back here when we were talking about a contained uptrend here and a contained uptrend here, well, now we have a contained downtrend, simply meaning that price is in a trading range between very important moving averages and price levels of interest. So what does that mean? Well, let's take a look at the S&P here. We have the S&P 500 SPY pulled up here on a daily time frame. And you can see we are back inside of this cloud, closing in downtrend, and also closing right at this 200-day moving average. Now, what we want to see, ideally, is we want to see price close back above Thursday and Friday's high, so that would get us back above the 200-day and back above previous day's highs. So that would, signal some momentum that we probably come test the top of this cloud, the 10 SMA. If we get above that, then you can, start thinking about getting long again. And if we see price strength confirmation, that's when we're probably going to see, potentially an attempt to new highs. So that's the ideal scenario. But if we continue to see price closing below this black line, that 200-day moving average, which currently right now we are bear flagging right at that 200-day moving average. We've got two closes in the past 3 trading days closing below that level. So that is significant. If we continue to see closes below this 200-day, which roughly is around 448 on SPY. So keep that number handy, 448. That's a very important level for SPY. Below it, odds are likely going to favor lower. So keep an open mind. All right, this week is OPEX. So you guys know that typically we do see some sort of run into OPEX, and the week before OPEX likes to put in pivotal lows. Now, are these the pivotal lows? I'm not going to say yes or no, but it is something that we see often. So it just prepares you that if we don't come back and test these lows and we close above this 200-day and above some previous levels, this is a great level to trade against. And when I say trade against, I mean, that's your stop. So if you were to get long back on here, we close below here, you get stopped out. Okay, so keep an open mind. You got to watch this price structure. Me personally, I'm not doing anything. I'm waiting because this paid. This paid very, very nicely. We had multiple trades that paid very nicely, especially the NASDAQ and the S&P. And you guys know from my trades, I said, hey, I'm getting long the S&P, I'm getting long the NASDAQ. And my trading is really dominated by the indexes, and from the indexes from there, then we have our playbook. All right, so let's take a look at the NASDAQ. The NASDAQ is slightly weaker. You can see the NASDAQ got rejected at this 200-day and is sitting on the bottom of the cloud, the 50-day moving average. So this is not bullish price structure. Okay, this is not a bullish price structure. So if we close below Friday's low, watch out. We could be in line to come back and test some lower levels. So keep an open mind in tech. But really, small caps is where the weakest index is. You can see this 200-day is actually moving lower now, and we have 3 days closing below the cloud. So small caps growth, those types of names are not performing well in this market. Now, on the flip side, you have energy that is still showing some relative strength. All right, so we're probably going to get back into energy this week. This is a very bullish setup. Take a look at XLE. I mean, it looks like we want to break out again. And you guys know higher time frames, monthly, weekly, daily, this all looks great, right? So definitely a lot of upside for energy. I think this can definitely go higher, and we're testing levels that we tested back in 2018. So we break above those levels, and we're probably going to go back to new highs. Excuse me, guys. So keep a close eye on energy. Like I said, we'll probably get some exposure into that this week. And also want to talk about gold. So we've had a significant allocation into gold for quite some time, and gold setting back up again. So, not really, too much damage has been done. We had this significant pullback. If you take a look at the higher time frame, all we did was come back and test this 10 SMA and test the year-to-date anchored VWAP. So that's a great place to buy the dip. If you are an investor, if you're an institution, you want to buy, on these levels, these pullback levels. So this is still very bullish. This is still a cup, and it looks like we're forming a handle. So I still like gold. We may increase that this week depending on what the market wants to do. Finally, we got to talk about crypto. You guys know I'm very, very bullish Ethereum and Bitcoin longer term. Right now, we are sitting on some resistance levels. So let's take a look at the 200-day moving average. And once again, you see Bitcoin came and tested it back in March, kind of hung out, and now we're breaking down, holding the 50-day. We really need to get back above this cloud. Ideally, I'd say we need to get back above 45 to 46,000 before we can maybe have another shot at this 200-day. If we do come up here and test this 200-day, I think there is, a probability that we may break it and move higher. So keep a close eye on Bitcoin. Ethereum, slightly stronger. You can see we recently tested that 200-day, this 3,500 level. So if we get back above there, if we see price strength confirmation above 3,600, I think, you can kind of rule out the bearish, sentiment, the bearish scenario for crypto. Ethereum's got a lot of tailwinds heading into the summer. We have the ETH2 merge. There's a lot of incentives for institutions to potentially stake Ethereum, and also supply constraints. So Ethereum is going to be reducing its supply, its daily issuance from 12,000 to 1,200 a day when we go to that merge. And for a short period of time, there won't be anything that's issued. So huge supply constraints, triple halving, and also potentially, quality yields for institutions. So keep a close eye on Ethereum as well. Very, very bullish Ethereum the long term. Just to wrap up, what are we doing this week? Well, we're waiting. This is this is downtrend, and downtrend we preserve capital, and that's exactly what I'm doing. So I'm waiting for price structure to improve, and I'm waiting for price to close above the cloud, and then I'll get long again. Until that happens, this is going to be a boring week, and that's completely fine, right? You don't need to trade every single day, but you do need to trade when the odds are in your favor. This is when the odds are in your favor, these uptrends. This was a very nice uptrend that we just got out of. If you didn't take advantage of it, you need to go back at your trading and understand what you did wrong. Back here was a nice 3-day uptrend. Had plenty of opportunity to scale and probably get stopped out at your entry. Okay, so we've had 2 uptrends this year, and we're already into April. All right, so what are we expecting for the rest of the year? Well, we typically, get around 6 to 8 good uptrends a year. So I'm still, optimistic for the rest of this year. But until price structure improves, we definitely have some bearish, comparisons. NASDAQ looks really weak. Small caps are rolling over. And we're failing at the 200-day moving average on the S&P. So until price structure improves, my expectations for the rest of this year, aren't too high. We need to see price structure improve, and we need to see price get back above this 200-day and above the cloud before I can feel confident getting long again. Until then, playing the patience game, and I think you guys should as well. That's all I got for you this week. I'll see you on the open.